G'day there. Welcome to the closing bell on the 28th of Jan. I'm actually down in Torquay at the moment, having a bit of a break, but still wanted to make sure I got this out to you in a timely fashion. So I'm just recording this on the Friday after heading down for a swim this morning. God, it was beautiful. And now just looking at the markets, and I know everyone's getting pretty excited about things rallying. But I just wanted to give you a bit of a long-term perspective on how things are looking, just to take the rally with a grain of salt, I guess. This is just a long-term chart of the NASDAQ, and just again, using my trends, having a look at the monthly trends here. You can see going back to 2001 quite clearly the shift in trend when that 10-month exponential crosses under the 20-month simple. And we can see on the NASDAQ, it's actually been really good at predicting these big, long trends that we've seen. You know, this is going back to 1989 here. We've got a big, long uptrend for many years. We had the tech crash, 2000 to 2001, had the rally into 2007. It's predicted every single one, had the crash in 2008, and it has actually been an uptrend ever since. And the first time we've had a shift in trend was just last year. And when you're looking at it from that point of view, where you've got decades of data that has been really good at picking out the long-term trends, and you can see that it's really not until that long-term trend shifts that you can become confident that the selling pressure is done and that you could probably start getting bullish again. When you look at what's happening at the moment and you read all the articles saying that this is all over and things are bullish again and jump on, look, there probably is some more upside, but looking at the NASDAQ from the point of view of these trends, you can see it's still in strong long-term downtrend, isn't it? That 10-month exponential well below that 20-month simple. We actually do need to see that cross before we could become 100% bullish. Who knows how that will take shape? And look, it could just start rallying straight away from here. And if it does that, eventually things will turn around. You can start getting super bullish. But right now, you've got to just accept the way this thing looks, that it is actually rallying up into resistance. And even if it can break through the 10-month exponential, you've got a really strong level of resistance above at that 20-month simple moving average. Prices could get back up there and quite easily turn back down for the next leg down. Yes, things are looking pretty good. Definitely, we've got the small cap stocks starting to pick up a bit of energy after being absolutely hammered last year. So there is, a bit of bullishness about. And look, it could carry on. You can actually see here we've got that monthly buy pivot. It's the first monthly buy pivot for a while, and that is your first step of saying things could be turning around. And that was a couple of months ago in the NASDAQ. And so it has behaved in a bullish manner, and it may very well bust through that 10-month exponential if the Fed comes out and next week and doesn't completely step on the market's bullishness by saying, look, we're going to keep raising rates until inflation falls a lot further. It will all hinge on the Fed, as it always does. If they don't push back too hard, if they start to sound a bit more dovish, look, it is set up quite nicely to surprise to the upside in the short term. No doubt about that. But just be very aware that you're buying quite early in the turn, and there is a chance that things can turn back down especially if growth really does start to falter in a few months. So it may be a situation of sell in May, go away. We might get a bit of bullishness for the next few months. There could be money to be made, but you're doing it in the face of a longer term downtrend, and you've got to be aware of that as you're taking risk in this market. So moving on to the ASX 200, look, we know it's certainly outperforming the US NASDAQ. There really is a changing of the guard, isn't there, from the tech-led rally to now value, moving on to the resources going well. Banks are also going well here. So we really are seeing a set of conditions where Australia is outperforming in a big way. The Aussie dollar now really starting to pick up. And look, we're not far off new all-time highs. This is the monthly chart of that ASX 200 you should know pretty well. And not far off turning back into long-term uptrend. So look, another push higher. If it can really bust out through that all-time high, it is going to be looking pretty good. There will be a spurt of buying, which will drive things higher for us. So there definitely is opportunity to be taking on some risk at the moment, but with very, I guess, concerned about what could happen. You're not 100% bullish saying, let's go for it. You are actually a bit wary, I guess. And the main point I would make about how markets move is that we could get a spurt through that all-time high. And I'm always wary of the false breaks. So you could see a good shift of buying support, and that would definitely see short covering, because there would have been a lot of shorts put on in this area. They've been covering. There's been repositioning, and a break to new all-time highs would definitely see a good spurt of buying. But then you've got to be wary of the false break. If the momentum shifts and it falls back below that all-time high, that can be the beginning of a big leg down. So you are just aware of those things in the background. You'd be watching growth pretty closely. But if it does shift into that long-term uptrend, and it is starting to march higher on those monthly bars, you're just in a state where you will have time and you will have good upside momentum. So you probably can start picking up a few things and taking part profits pretty quickly. But definitely it's more of a bullish footing than we saw last year. I think many market commentators are a bit surprised. I certainly am amazed that our markets managed to hold in there so well. But growth is, standing out. This is a thing that could derail things if US growth, as we've just seen, has come out pretty strong. If their growth holds up really well, which could keep that inflation bubbling along, the Fed is going to have to raise rates further to slow things down. So be careful what you wish for, I guess, with the way things are starting out at the moment. And we've really got to wait to see what the Fed does in reaction, whether it pushes back against this bullishness and says, no, we're not done yet. And the market could really reverse quite quickly. So again, just giving you what could happen from here, because it is at major resistance zones at the moment. If the music stops, if the Fed pushes back and prices do fall rapidly below this area in the ASX 200, which is around that's 7,000, 6,800 to 7,000, which is only a few hundred points below here. If it does head back below that area, it really can look quite bad quite quickly, especially if that long-term downtrend remains. So I'm not going all in yet. I'm allowing this to play out. I am going to start buying a few things, but I'm well aware that things can look quite bearish if the music stops and things turn down rapidly from here. Gold really remains the most interesting chart out there, while things really are quite up in the air, I think, as far as equities. And, we've really predicted this run pretty well. And I was talking about it last week. It really is a great looking chart to me long term, looking at that really strong uptrend, the correction we've had, and now we're seeing that false break and the resumption of that uptrend, which is really looking quite bullish, long-term trend starting to shift. But just want to note for you today that the strong rally we've had in this last few months is just racing up towards the sell zone of the wave down that we've seen there. So that is the high risk area. It's around 1958 to 2015 in gold, US dollar gold. That's the area where I'd probably expect to see some selling pressure and possibly a bit of a correction. But then I'd still think there's going to be good buying support beneath the market. So I'm just thinking it's getting a little overstretched in the short term, gold, and I guess you'd be waiting for any sort of correction as a good opportunity to start jumping on some of those gold stocks that are starting to move. Because if it does find support, especially around that point of control, around 1880, turns back up, I mean, you're looking at potentially big upside if it can break through the all-time highs and just resume that very long-term uptrend. Gold and gold stocks should go for a big run. But again, it all hinges on what the Fed is going to say, how they push back on the strong bullishness that has started at the start of this year. So that's really it for today. Too nice a day down here. I'm going to head back down to the beach and have a swim, I think. And hopefully we'll know a bit more next week, and I'll be able to go into a bit more detail in the next closing bell. All right, cheers. I'll talk to you then.